So you had mentioned, Zach, the two languages there, the GAAP and the IFRS. And for years, like we in the financial reporting ecosystem, we've promoted convergence between those two standards. But some of the momentum, it seems like just as an observer, somebody that deals with it every day, some of that momentum has declined. I guess that's a long-winded way of saying, like, what are your views currently on convergence? Do you think there's, given the SEC's recent, kind of comments about, GAAP reconciliations and that kind of thing, do you ever see a path where, the SEC may accept IFRS outside of the FPI, foreign private issuer community, or not? Are those days sort of long gone?
So, as an investor, who I've actually analyzed companies in 6 of the 7 continents. I'm still waiting on Antarctica, but not sure I'll get there. I really valued the move towards greater similarity and convergence between IFRS and US GAAP, because I had to operate across both. So I went from analyzing, regional banks in the US, all the way to some of the global champions in the UK, in Italy, in China, and Australia. And so describing the same economic phenomenon in almost the same way, not always entirely the same way, but in close enough way, it's really valuable, and it really helps you be able to assess what's going on with a company. We had a really strong program of convergence between US GAAP and IFRS up until about 10 years ago, when that stopped for various reasons. I'm not sure we'll get back on track with the formal program. I think there are a lot of good reasons why it did stop. But I think it is a good thing that the FASB and the ISB are able to talk and share information about what each is doing. So as an example, we had a meeting in October where they were able to describe their work on carbon credits, essentially. They had come up with a proposed ASC that would look at carbon credits and say, here are some of the quirks we found in trying to come through this. And some of those lessons learned they had, we could actually feed right into some work we were doing on intangibles, where I personally thought we could tackle carbon credits that are essentially held for trading, where companies wanted to buy and sell them rapidly. In the same way, we looked at something like cryptocurrency. But what they said is, no, what you actually find is that those companies sometimes flip between buying and selling them and using them as carbon credits. So you can't have exactly the same accounting for those two. So while we're not on a convergence path, I think at least information sharing and understanding the economic phenomenon behind what you're describing is really valuable, and it's a good relationship we have right now.